Welcome to the Teaching Tax Flow Multi-Member LLC Basics mini lesson. Excited to talk about multi-member LLCs as they are a hybrid entity between a partnership and a single-member LLC. They have elements of both. So let's dive into our agenda. So a lot of great information here as we field a lot of questions about limited liability companies. We're going to talk about that formation, management, and asset protection, taxation reporting of fringe benefits. We're going to dive into some IRS guidance. A lot of that guidance is similar to our partnership basics mini lesson. And then we'll hit our calls to action. All right. So with a multi-member LLC, the LLC is required to file documentation with a state filing agency, and every state, as we know, is a little bit different. Owners are referred to as members, shareholders, not proprietors, but members. And members have an operating agreement. That operating agreement is a key document because it outlines the management, the roles, including ownership percentage and share of profit and loss and deductions for the LLC. The nice thing is members can contribute assets to the multi-member LLC without triggering a tax, except for the receipt of cash. The entity life of the business is typically limited to a fixed amount of time, and that's going to get laid out of that operating agreement. This is really a great entity for owners that want liability protection and want to avoid double taxation, as long as they are comfortable with the administrative costs and legal fees to set up the LLC. As we say in most of our mini lessons, we are not attorneys here at Teaching Tax Flow, so we definitely think you should use someone on your board of directors. Talk to your legal counsel about setting up an LLC and some of the filings, because members are not typically liable for the debts of the LLC. Let's talk about the taxation. Similar to a lot of these flow-through entities, on a federal level, no taxes paid by the LLC itself. That income and the deductions that are laid out in the operating agreement, those are reported on a Form 1065 and organized and distributed on K-1 forms to each member. We're going to take a look at those K-1s in just a moment. Double entry bookkeeping is required because this tax return has a balance sheet. Also, complex books and records are needed because each member has its own capital account that has to be tracked, and it's with basis as well. Members are eligible for some excludable fringe benefits. Any taxable benefits are reported as guaranteed payments or as adjustment on each member's K-1. Multi-member LLCs must generally use the same tax year as its members, and the net income and guaranteed payments are subject to self-employment tax unless the multi-member LLC owns a rental property or some type of passive income. Good thing again, the members may qualify for that 20% Section 199A or QBI deduction, and all that information flows through on a K-1. Let's take a look, very similar to our partnership basics mini lesson. This is a partnership tax return, Form 1065. You can see there's a lot of information needed here. This is really the profit and loss statement, but the balance sheet is so important on a partnership return as well. And it really reconciles the book and tax, difference between book and tax income. It could be the same, and the partner capital accounts. So make sure if you have a multi-member LLC, we highly recommend you work with a qualified tax professional that understands Publication 541. Publication 541 is what really lays out partnership taxation, and by default, a multi-member LLC is taxed as a partnership. That document you're looking at on the right is a sample K-1. That K-1 is going to lay out each member's name, address, social security number. A member could be a person, it could be an entity, but it also lays out ownership percentage in a bunch of different attributes, which are right here as my cursor shows you, for income deductions and qualified business income. So a lot of stuff on this K-1. This K-1 is so important that it's being done correctly. All right, let's put a bow on this and do our calls to action. If you have a business and you're looking to start one, take a look at that entity chart and determine if a multi-member LLC makes sense for you. Really review your operating agreement. Make sure your operating agreement is indicative of how the operation should be laid out and reported, and make sure that K-1 is properly prepared. We see a lot of errors on the K-1s. If you're a multi-member LLC, consider making a tax S-Corp election to legally and ethically reduce self-employment tax. So if you're in a high self-employment tax situation, and you might be able to make an S election and pay yourself a reasonable compensation, there's more information on the S-Corporation mini lesson. That is a strategy that we would recommend you look at. Multi-member LLCs with real property very, very rarely benefit from an S election, and always consider state-specific tax laws because there are states with franchise and excise tax. All right, take care and have a great rest of the day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.